Everyone's well. I hope you're living the life according to the way you want to live it. You're happy. You're being kind to yourself. You're being kind to your family and friends. You're being kind to everyone and your animals, and just trying to make this world a better place. Crypto Airy sent me a request just to comment on a video that she did and a couple of stories which she was talking about from Japan's point of view, which I found really interesting. I have to say, Crypto Airy, I've really enjoyed your video, really good, and I was unaware of just how big SBI was and what they were doing, particularly in the US market, and I think this is a huge story. So really well done for getting all this information out. I loved the way you went through all the information, really very distinctly, and basically followed it through. But I think this is a huge story, because this is really going to be where the institutional money comes in, and it's going to be absolutely big. So the story that Crypto Airy found was finance magnets. Blockchain startup Templin gets into an agreement to buy a US broker-dealer. And it's also aligned with SBI, which apparently, as Crypto Airy says, one of the biggest players in the Japanese market. So please watch that. And please do support Crypto Airy as a subscriber. Her information is just fantastic, really. So what Crypto Airy wanted me to comment on, I'll just play the video, and then we'll just comment on that. Won't be a sec. So we've just got this video, which I'm playing. I wonder whether you can play it at the same time. Here we go. Oh, what happened there? I'm not very good at this sort of thing. Wait a minute. Commenting on what Crypto Airy was saying. This paragraph here, attempting to utilise the acquired firm's capability to create a turnkey solution for the initial issuance and secondary trading of ICOs as unregistered private securities, and that's the important thing, unregistered private securities. As I said before, I believe cryptocurrencies are securities. Templin's proprietary technology combined with Liquid M Capital's ATS will provide ICO investors with the first of its kind platform for the sale and secondary trading of digital tokens. So this is pretty amazing, actually. They're going to be registered in the US, obviously, with this broker. US regulated, also regulated by FINSRA, and also they'll have ISDA documentation in place, which is documentation for swaps and derivatives, which basically every player in the market that buys and sells cryptocurrencies and derivatives needs to actually sign ISDA documentation between themselves and the exchange. So say if I'm a fund manager, I need to sign ISDA documentation to be able to trade and deal on the exchange, and the exchange also needs to sign that to trade and deal with the counterparty, being the fund manager or the big financial manager or the investment manager. So this is really big, because this platform, basically, a turnkey solution is basically an overall solution for the issuance of ICOs and also for the secondary trading of ICOs. So basically, you've got your initial issuance of ICOs, of course, which is considered the primary market, where they will be considered unregistered because they wouldn't have gone through the regulators as being registered, and they'll be treated as private securities, but they will be treated as securities. That's the key word here. Also, once they go onto the secondary market is where you just buy and sell the ICO, or buy and sell the cryptocurrency, basically. It's not then called an ICO, it's just called cryptocurrency on the secondary market, like you buy and sell it on Binance or buy and sell it on Bitfinex and that sort of thing. So initially, the ICO is called a primary issue. So primary means first. First, when it's an ICO, you might buy it before it comes onto the market, or you might wait. And the secondary trading, which is when it's on the market. That's why it's called primary. No different to the equity market. You have a primary issuance. You might buy it before it trades on the market, and no different to the bond market where you call it a primary issuance. So the primary issuance is the ICO, the initial issuance, primary, and the secondary trading is just you buying and selling the cryptocurrency. But what's important here is securities and unregistered private securities. Now, I believe all cryptocurrency are securities. In terms of financial markets, and again, I'm not looking at a legal definition or anything like that. In terms of financial markets, a security is you basically buy and sell a security on a third-party exchange or even over the counter, where you're buying and selling, one party makes a profit and one party makes a loss, and it's subject to risk. That's pretty much what a security is. Now, as far as I'm concerned, what the SEC came out with, the guy from the corporate finance area, I forget his name, William someone, he was saying that Bitcoin and Ethereum were not securities because they were basically decentralized technology. That is absolute bumpkin as far as I'm concerned. It is completely irrelevant to what a security is and what isn't a security. Whether something is decentralized in their eyes or not is completely irrelevant. And anyway, there's argument to say that Bitcoin is not decentralized in the sense that it has a centralized problem with the miners. 4 major miners will actually transact and basically authorize their transactions. In some sense, that's not centralized. And we can look at other cryptocurrencies that are almost centralized, like EOS, with all their problems on the administration side and the foundation side. But look, that's beside the point. The cryptocurrency technology has nothing to do with a cryptocurrency trading on the secondary market. Okay, once we get to the secondary market, it becomes a security by virtue of a buyer and a seller that buy or sell at a price on an exchange or over the counter. They are subject to profit or loss, and it's done over an exchange, i.e. a third party. It is a security, and I don't care what the SEC, that guy said, because he is just totally wrong. The fact that he's saying that, it means that, the technology is decentralized, it's completely irrelevant. Honestly, it really is completely irrelevant. So this is big, because what this means is these guys are going to offer a platform for the institutional guys. Basically, they're going to be completely registered with the US regulators. They're going to have ISDAs in place, which are for the professional market. The ISDA is basically an agreement between for derivatives and swap agreement, and it basically includes derivatives, which derivatives are their derivation of the underlying physical security. So it'd be like Bitcoin futures or Ripple futures or Ethereum futures, where you can buy and sell derivatives on margin, and you can buy and sell derivatives on margin, and you can basically trade it against the underlying physical contract. So, for example, you can trade Bitcoin futures on the exchange, and then you can go to the cryptocurrency exchange and buy or sell physical Bitcoin, the coin. And you can actually arbitrage the two, or you can swap one for the other and make money one way or the other. So, there's quite a bit you can do there. And the same with Ripple, and the same with, Ethereum or anything else that they put on the futures exchange. Now, the beauty with the futures exchange is a professional investor, whether it's a hedge fund manager or a trader or whatever, can get a very large position on, against the underlying physical asset, but they don't need the whole cash flow. So say they want to buy a $10 million position in Bitcoin, they don't physically need $10 million to go to the physical cryptocurrency exchange where you need to have $10 million. In terms of the futures exchange, you only need, say, a tenth of that. You might need $1 million deposit, and then you've got to keep paying margin. But you can get, $10 million worth of exposure with a much smaller deposit and a much smaller margin. So the way futures work is you open up a futures account with the exchange like this one, and you basically put in a deposit, and you basically get margin, intraday margin all day long. So basically, if the market moves against you, you've got to top it up. And most big international players or investment fund managers or traders will basically have enough deposit to be able to absorb the margins, which are basically intraday movements within where the underlying crypto price moves. The difference with futures, which are called derivatives essentially, you can keep buying and selling them, and essentially there's no limit of supply. Okay, that's the key. So there's no limit of supply on futures. So the exchange just keeps basically, you can buy and sell as much as you want on the exchange, and you've got credit risk to the exchange or settlement risk to the exchange. The big international fund managers will have credit risk or settlement risk to the exchange. But the key is in the physical cryptocurrency market, as you know, there is supply issues. So obviously, the total issue and the circulating issue. And so what could happen is there could be on the derivatives exchange, Bitcoin futures, which are derivatives, big investors or fund managers could continue to sell. And before they know it, they've sold more than the 21 million outstanding physical Bitcoin coins, if you want to call it that. And there could be a scramble to close out their positions, and that's what you find. There'll be a squeeze because there won't be enough of the physical asset to offset the short derivatives position. You see what I'm saying? Now, with the futures market, you can actually have physical delivery of the coins, or you can have margin delivery of cash. You can have delivery with cash or physical delivery of coins. I need to have a look at that, whether the Bitcoin futures are physical delivery or they're just, you just pay out the cash on expiry. They do expire every 3 months, and I think it's around the 15th of the month. So I've got to check that out, but I will come back to you on that. I'm not sure whether it's physical delivery. I don't think it is, but I'll have to check. But certainly the futures market can actually affect the physical market of Bitcoin, and generally the futures market will dictate the price of the physical market generally, but as I said, when there's a squeeze and too many futures are being sold at the derivative level, you often get a squeeze on the physical level. So you've got two different markets, okay? The physical market, which is the cryptocurrency market for Bitcoin and Ethereum and that sort of thing, and you've got the derivatives market, which is a limit, it's an unlimited market. They'll just keep issuing. You can keep buying as many futures as you want or selling as many futures as you want. But obviously on the physical market, there is a cap to what the circulating issue is and how much money, how much circulating issue you can get your hands on. So I hope that makes sense. So often when you're trading, if you're trading the underlying physical coins, you should really be watching the futures at the same time on the derivatives market, because the futures can actually dictate where the price is going on the physical side. So as you can understand, if they're selling futures, in large positions on the futures exchange, that eventually will flow through to the physical market. But in saying that as well, as I said, it can only happen so far because, as I said before, the physical market, being the cryptocurrency physical market, will only have a set supply, and eventually there'll be a ricochet effect like we've seen even in this market, that you can only keep selling for so far, shorting a Bitcoin futures position until eventually the physical supply runs out. So it is a good idea to watch the futures market if you're a trader, particularly on the cryptocurrency exchanges. But anyway, look, well done, Crypto Area, for that story. Huge story, because basically this means that the market is going to be very, very ready for the institutional trader. And I have to tell you that Crypto Area is right. The banks that she's mentioned, that they are the largest banks in Japan, but also Japan, I don't know whether people realise, Japan's got the second largest fixed interest bond market in the world, and also they're one of the largest traders of US yen. They're very big traders in foreign exchange, and obviously they've, basically they love the cryptocurrency market as well. So it's going to be pretty huge, I should imagine. So thanks for calling out Crypto Area. And please, everyone, my subscribers, I'd love it if you gave Crypto Area a bit of a boost on the subscription side. I think the story is fantastic. It'd be lovely to see her get some support. She does a really good job. So thanks, guys. I hope you're all looking after yourself. Please be well. Look after each other. Life is really short, and I look forward to talking to you another day. Thank you.